The trader that I'm speaking with today has done over 50% in returns in the past 8 months, over 6 payouts with different prop firms in the past 2 months, and he is on a roll getting and making a full-time income from trading. Guys, I'm here with Tyne, who is one of our top traders within the Trading Academy, and we're going to hear a little bit more about his story. How did he get into trading? How has his trading journey been like? And how can his experience over the past 2 years help you guys in your own journey? So I hope you guys enjoy this episode. It's going to be another amazing one. Make sure to leave a like and subscribe, and let's dive straight in. So Tyne, can you maybe introduce yourself? How old are you? Where you're from? And what got you into trading?
Yes, my name is Tyne. I'm from the Netherlands. I recently turned 22 and I've been trading now for I think 3.5 years.
Fantastic, man. And where did it pretty much all start? So you got into trading 3 years ago. Was it because of signals? Was it because of YouTube videos? Was it Instagram ads? What got you into trading?
One of my friends, he was already busy with trading and it caught my attention because I always had an interest in financial markets. And I lent a book from him called Supply and Demand Trading for Beginners. And that was my first introduction ever into trading.
And what was he trading at the time? Was it mainly doing signals? And did he kind of tell you, hey, look, Tyne, you have to get on these signals, man, because I'm making like massive returns? Or was he already trading with like a reputable individual? Or did he get like a course that he recommended to you?
No, he already before that I saw him that because of him that signals do not work, and he made a shift from crypto to also trading like spot contracts, and I was following what he was doing. He was also not successful at the time, but he was working towards, and I was like, oh, this is interesting. This can potentially make my life better. But I also really liked the charts to begin with, so that's how it started.
Fantastic. So he kind of helped you filter out the nonsense that's out there and smoothened your overall journey. Do you feel like that really helps you? Because once he lended you that book and you did some reading on trading and you understood, okay, this is something that I really want to pursue, what were kind of like the next steps that you took? Did you go onto YouTube? Did you buy a lot of courses? Like, how did you really learn like the trading aspect of it?
Like doing a lot of extensive like research myself, like YouTube. I was also happy that in the beginning someone told me like just pick one domain of trading. For me, there was like more of the supply and demand, market structure, liquidity approach. Um, and yeah, from there on, I went into a community first. There I also met Rutger. Yeah, just also meeting other people and just developing myself as a trader to experience, but also through learning.
Fantastic. So you joined the community. You probably learned the first few things of your beginner strategy there. What was that first trading strategy like that you used to use back in the days, and how did it perform when you first started using it?
Now, when I first started, that was also my biggest lesson. I instantly started with like going into doing these challenges because they look very promising. That you can get a 200K account, you can make
You're
these
referring to
returns.
prop firm challenges, right?
Yeah, prop firm challenges. And I thought because trading looks from the outside really like easy because people are like drawing lines. The theoretics are not that hard compared to like what you're doing on a daily basis or like school, etc. So I thought, oh, in 3 months, I'm gonna be in Dubai, I'm gonna get this. So I was trading mixes of like higher time frame, lower time frame, 1 minute charts, yeah, leaving me nowhere but with losses and with failures, so to say.
So in the beginning, mainly a lot of losses, fading prop from challenges. Where did that shift come from? Going from that unprofitability, using a strategy that maybe didn't completely resonate with you, like the lower time frame. Where did you kind of like make that shift, and where did that shift come from? Like, did it come from yourself, or did somebody come to you saying, "Hey, look, Tyne, this is the kind of strategy that you need to use if you want to be successful"?
Yeah, it was of course also help from other people. At the time I was with Rutger doing like a management strategy, but even though that management strategy was good on paper, if my input in it was still unprofitable, then also a management strategy like would not save me or get me funded. And then I got 1 out of 10 accounts I did in that relation funded, and then the company went bankrupt. So that made me really realize like, okay, I have to get back to actually learning the skill, actually focus on the process, because now I was only focused on how can I get as much money as possible from this. But
Yeah.
yeah, how can you expect to make a lot from something, yeah, easily that doesn't exist, I believe.
Yeah, no, I understand. And by the way, guys, for anybody who's wondering who is Rutger, Rutger's one of the members of the Trading Academy. Just so everybody who is new to the channel knows that as well. Now, if you would go back time into your trading journey, would there be anything that you would change about it? Because obviously, everybody would love like a very smooth road, a very smooth process where you only have success, success, success. But obviously, the setbacks overall have helped you understand more about yourself as a trader and have probably also formed you into the trader that you are today. Like, how have those setbacks, let's say, formed you? And in regard to that, would there be anything that you would like to have done different?
Yeah, what I first of all had done different is like with the knowledge I have now, I know that you can only get the results if you really approach it really process based instead of result based. Because also even yeah, trading looks easily like the technicals, etc. But the actual development of like rewiring yourself to be a profitable trader in a psychological sense, that's really hard. So if I what I would do differently is at the beginning have the right expectations, like focus really on the process, focus also on becoming an actual like a profitable trader, even if it's with 100 euros on an account, like track it, see if you're profitable, and then it's interesting to do prop firm because then you know, okay, I have the skill, and then it's a calculated risk instead of just a risk and like spray and praying that you get an account. Because a lot of people start trading for freedom, but how can you get freedom if you don't actually develop a true skill?
Yeah.
So that was for me the biggest thing I learned, and that also it humbled me also a lot. Trading, it was a hard journey. It still can be sometimes a hard journey, but it really helped me as a person also develop myself a lot.
Well, let's talk about those humbling experiences then. How humbling has the market been to you? What have been those most humbling experiences? Is it been, let's say, monetary losses? Has it been blowing up prop from challenges? What does it look like?
Uh, monetary losses. Also, for me, it was more at the time I wasn't really satisfied with school anymore, so I quit school and I thought, hey, I can just like fix this in a few months and this is my new future. But what I also learned then is that you cannot, if you're unprofitable, only do trading. Like also people watching, if you're doing that, then you're just destined to fail because at the beginning, especially you cannot put all that pressure on yourself to like I have to make trading work because trading is already hard enough even if you have a stable environment for
Yeah.
yourself. So that's what humbled me quickly, and also made me realize, so hey, let's fix also other stuff and let's really focus on like trading in the process. On the process a lot. So monetary loss humbled me also that I thought I could fix it in 3 months. Humbled me, that didn't happen. Just like these failures that were only caused by me focusing on the results and wanted it quick. Because after I stopped having an expectation on the results and just focusing on what I need to do on a daily basis with trading, and it doesn't mean taking a trade every day, but like doing what you need to be doing to become a profitable trader, then everything started to click. And that started by opening a live account and actually tracking things instead of going nuts on the prop firms all the time.
Yeah, so there's a positive development there. I think definitely from those past experiences, bringing that back into, let's say, that turning point in your career where you indeed understood, okay, the pressure shouldn't be so much on making money because, again, like you're going to be making monetary decisions in your trading instead of those rational, objective decisions that you need to make. I think, especially maybe with like placing your stop loss and your TP, obviously, what I've seen with a lot of traders is that you'll see the trade go into, for example, 1% profit. The 1% is not in your mind going to be 1%. It's going to be 1,000 or 2,000 US dollars, which is then in your mind going to again translate into a month's rent or into I could buy this or I could buy that. So I think that's a very good point there that you highlighted. Now, then going from indeed, identifying those setbacks, where did it kind of like really start to feel real, that trading? Like, was it the first payout? Was it, let's say, doing 2, maybe 4% in a month consistently for 3 months? Like, where did you really feel, okay, this trading thing that I've been trying to do for the past 3 years, now it really starts feeling real?
Um, Yeah, the 6 months of like doing with this like following the exact same risk all the time on my record ever since I started tracking it since the beginning of this year, that meant more to me than getting a payout. Because if you get a payout, that's a one-time thing that you cost. You get money, money goes away, you can spend it. But having a skill, that's something you can repeat. And for me, showing like also publicly showing that for like 6 now 8 months it's profitable. I didn't use more risk. I didn't revenge trade. I, yeah, I just kept myself in tone. That really showed me more than monetary rewards from payouts will ever do. Because with this, I can further develop this. And if you have the skill, you can just keep on doing it. Like, do not give the man the fish, but teach him how to fish, and he will have fish forever. That's something that always stuck with me.
Well said, man. You're preaching like the Pope. Now let's preach strategy. Let's talk about the strategy. I want to know, how does Tyne make money? Let's talk about the strategy. What are the confluences that you use, Tyne, when trading?
I use I always start my trading on every asset class with higher time frame analysis, but also by reading a bit like what's happening in the world, etc. That I'm not trading against the trend. If I see something and I have an opinion about it based on like news articles I read and like numbers I see, I'm trying to see if I also see that in the technicals on the higher time frame, and based on the bias that's being created by those two, I'm looking for entries. But what's the difference is I don't really tie myself to one time frame. I don't go under the 1 hour, but sometimes I just want to position myself a bit different because I expect a different range. I have an example for that. If I expect a small move to happen, I'm not going to position myself with a swing stop loss because you can't get the risk to reward. And if you
Yeah.
drag it further to the risk to reward that is profitable, I don't have the conferences or the fundamentals to drive such a long move. So that's where it
So
starts for
slightly
me.
more dynamic approach in that regard.
Yes, more dynamic because I've came to realize that if I have a lot of rules, I make it hard for myself. But I have a lot of rules on risk, higher time frame analysis, and then also how I position myself. Because even though I trade on the 1 hour and the 4 hours sometimes, I use the exact same concepts for it: supply and demand, market structure, and liquidity. When I enter on the 1 hour on certain instruments where it matters more, I use also a bit of like time and price, like a London manipulation. It gives like an extra confluence to it. Yeah, just more all-round knowledge, but mostly focus on like my psychology and the risk management to it.
Okay, I think we're gonna need to see a trade breakdown soon to kind of like translate those thoughts onto a chart. But before we dive in, what pairs do you then trade using the strategy? Like, do you trade every single pair? Are you that dynamic, or do you have like a fixed set of pairs
Uh,
that you traded on?
yeah, I trade majors and yen crosses. For that, I use the DXY and GPY basket. Like I read most of the fundamentals I read are about the yen and about the dollar. So and then I look in a technical sense on those indexes. Like okay, how is it showing that in the technicals? And with that bias of the technicals, I I go to the majors and the yen crosses to see okay, does that also overlaps? With which instrument does it overlap the most with that bias I had for the yen or the dollar? And I also trade indices like
Yeah.
German 40 and gold from time to
Okay.
time.
And how do you then form that fundamental bias? Because I think it's very interesting to take note for everybody watching as well, is that Tyne then combines the index together with the cross pairs. So instead of just looking for just the confluence, for example, on USD JPY, you can then also use the dollar index and the Japanese yen as kind of like an additional technical confluence to further increase the overall edge. I think that's clear. But from a fundamental perspective, like what do you then specifically look for on the fundamental side of things? Is it just, okay, you scroll through Bloomberg, see what the headlines are, or is there something that you keep track of, which is a little bit more, let's say, mechanical?
I don't really keep like just use like one headline to form my entire. It's more like different things. Look, it's okay. What kind of news events are happening this week for the dollar? What is expected from it? When there's an interest rate decision, like look at CME data. Like what are the odds for the different kinds of rates they have?
Yeah.
Also, like that's not macros, but also it's counted as fundamentals. Look sometimes at COT data to see like what's like the sentiment in the markets by the different participants. Yeah, like I don't want to make my decision based on one thing. It just gets formed by like an overall, like more of like a puzzle that I'm like using the things that are driving the instrument the most. Those are different things for indexes than they are for like currencies.
Yeah.
But you're just keeping an overall view, looking at the index itself, because you said when I use DXY, it's just to see with the technicals, okay, what's the dollar doing itself, and then look at what it's doing against the other pairs. That's how I
Okay.
usually approach it.
Okay, perfect. Now let's see it in practice, man. Would love to see your screen shared. If you can dive into a trade setup, that would be
Yes.
fantastic, and kind of explain your overall thought process of taking a trade. If you can just mention the pair, and then just yeah, do a top-down analysis showing the entry, where you place your stop loss, and where you exit the trade. Then I
Cool.
think everybody can learn a lot from that.
Okay, I have it here. This German 40 trade, it breaks down because Fabio said also a dynamic approach. I also have a dynamic approach to risk to reward ratios, and I'm also going to explain why I chose. Normally it's around average. I thought my average risk to reward out of 91 trades this year was 3.3, but this trade, for example, was 5.5. So I'm also going to take you guys into how I manage my trades, because for the management part, I also always do the same thing. So this trade started, German 40. It broke swing structure, and we reached an all-time high. After that, it broke here down to the downside. And in this leg, it already had retraced. It had this first step into this zone that caused this move down. Then it had the second tap. And that's something I want to see a lot of times, is that when a zone gets tapped, you often see it reaching it back again, like as a form of liquidation, and then it sets off again. So what I was looking for here is, because we broke this, this was a retracement, but because we hadn't reached the discounted levels yet in this swing range, I still thought, okay, we might can possibly lower to maybe also take out this this second tap, like here also second tap, and this was drawn before, and as you can see, it reached there. Like that's in hindsight, but still. But how this trade was formulated is, after we reached here back again, we came up and we took out here this buy side. We left this sell side liquidity range open with these kind of equal lows. So I was then interested in this 4-hour zone, because it took out this high. So it was like, okay, it took out a high, strong high. It broke structure, and this zone had liquidity before it in the form of sell side imbalance. Sell side and buy side imbalances are nothing more for me than a form of internal liquidity. So when it came here to this area, I started to look like, hey, can I get a confirmation? And that confirmation had to do with time and price. I got a run from London over it, like the AMD, like London over it, and then here on the 15-minute, a double fractal, and on the second fractal, I ended with a sell stop. Like depending on the pair, like what the pair does, I wait for sometimes for like first a break and then a limit order, because I've traded this instrument a lot. German 40 is really volatile. It gives like also this entire move down didn't left any form of a real retracement. But we came into this zone. I was interested into selling here. I got one of my entry models here, which is the AMD entry model, which aligns also with that works good on German 40. So I followed the 15-minute structure, and I entered here because we ran over London. Also, we had here in this leg that we are in a FIB area. We had internal structure, a zone, and this. And that's also my higher time frame checklist. Higher time frame checklist is always liquidity, zone with a strong high, and the structure that in the range you're entering from of the zone that you're trading pro trend. For the management part, I was targeting these equals, but because we were still very high in that swing range, I wanted to take this 5.46 risk to reward. And I said before I entered the trade, if it reaches here, it's going to be turned into break even. And then before the weekend, I placed my stop loss into 1R because of a weekend hold. I didn't know what was going to happen. I wanted to at least secure some profits because we were already so far down into this move. And then it perfectly reached this level, netting me 5.46 risk to reward.
Incredible, man. A perfect trade breakdown. I think everything was in this setup that I love talking about, from liquidity to market structure, premium versus
And I
discount,
missed one
and
thing that's
the
important.
FTP.
Also,
Yeah.
the numbers are also important. The unemployment numbers that also came out. There were like some speculation that the indexes were going to bleed a bit from that, but it was also for me like there was only consolidation. We just broke this. We set it an all-time high. I was following this price action to 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 catch the real retracement. And that played out for me. And I like to keep it, besides the higher time frame, also dynamic, because I feel like markets are shifting. I feel like I need to develop my tools as a trader. So sometimes you need to position yourself differently in a
Yeah.
different asset class that moves with more volume or less volume.
Yeah, very well said. I think it's amazing how dynamic you are and how you bring that approach into this. Um, then, because most of the things that I want to ask you pretty much already answered, like in regards to, okay, where do you place your stop loss? Well, obviously now it's placed above the overall manipulation high, which is a strong high, which then after that causes multiple market structure breaks in towards the downside. We discussed the different timeframes that you use. Now, something that I'm very curious to hear about is, do you always risk the same amount on every single
There,
trade, or is there a difference in that?
in the risk, like on my live account, I risk 2%. So the percentage you mentioned, it's 54% this year. Like you take that by two, so that's around
Yeah,
25
104.
are collected. But I
Oh,
do
you did 2% on
2%.
all those. Ah,
Yeah,
okay, yeah.
2% on every one. I never overstepped. But what I always do is I don't cut my losses, but I like to also add into winning positions. So this didn't give a retracement, but if this trade would give a retracement before it hit this liquidity level I was initially targeting, I would just, and it already reached this, I would just set this to break even and then try to maybe shoot another R into that so that we have 2 times the upside and the same
Yeah.
risk exposure in the same trade,
Uh-huh.
Ali. Um,
Okay. And do you manage the trades? Because obviously you place this stop loss to or in profit at 1R over the weekend. Is that the only situation during which you move your stop loss, or are there other situations where you also manage the positions differently instead of just always leaving like the stop loss at the stop loss? So it's either going to be a stop loss or a TP hit trade.
I always leave it the same, but also with this, I do it dynamic, but I have one rule for myself, which I never break, is when I get into the position, or sometimes even before when I set the limit, I already have marked out for myself on which kind of place I want to manage it in a way. So then I'm thinking about it before I see prices running, before I see the trades doing different stuff inside
Yeah.
of the range I'm trading in. And I just place alerts on that level. So here was an alert, and it's and then I just do what I determined before when I was like thinking about it calmly and not managing it based on what's happening inside of the trade, because that's irrelevant. That's really irrelevant to me.
Yeah. No, great, man. Very, very clear. I think there's not a lot of other questions that I can ask. Like, the only other thing that I'm very curious to hear is like, what's then the average trade duration? Because now here you're obviously trading on the 15-minute time frame. Is
Mhm.
there a difference in trade duration, or is it like completely random? Like, tell me a little bit more about that.
Uh, I've seen in my record that out of 91 trades, my average duration is 1 hour and 1 day and 3 hours. So
Okay.
that's the average. Sometimes I'm in a trade for 3, 4 days. Example was it last week. I had like 2 weeks ago. I had 3 winning streak with GBP USD, and like one was more of an intraday play, and then I opened a bigger swing position, and then I scaled in the swing position. So it's different from time to time, but it's on average out of all the trades, it's around 1 day.
Fantastic, man. Okay, great. Interesting. Now, what I'd love to hear, kind of like moving on, is what's then your kind of like your daily routine looking like when trading this overall strategy? Like, do you have a fixed routine that you stick to every single morning, to take these kind of setups, or is it like very random what your life looks like?
Um, I always look in the morning, like between like Frankfurt and London Open, but I also feel like, especially with the time frames I'm using with this time, positioning myself with a 50 minute, but that rarely occurs. That was mostly because of the nature of this instrument.
Yeah.
But I start my day. I look during London, I look during New York, and in the meantime, if no alerts really go off, or I don't, there's nothing happening, there's also no need behind the chart. But for me, I don't think I spend more than like 1.5 hours a day behind the charts, because I also feel like it's not necessary. But I spend my weekends like studying a bit about the charts, or like improving like my knowledge, or like reflecting and like making plans on what I could do better. I journal my trades in TradeZella, and then I look into it, on what that data shows and how can I improve it. But I don't feel, if you are someone that feels like, oh, you cannot do trading because you have a job or something else, that's totally not true, because especially when you can concentrate your time and actually focus on what you need to do, and you're not sitting behind the charts finding random setups, it's actually going to improve your trading.
Yeah.
And there's no need to be 4, 5, 6 hours a day behind the charts.
Well said. Well said. No, great advice, man. Now, moving on into one of the final questions that I have for you, Tyne, is what is the number one piece of advice you would be giving to traders watching this video right now, watching this strategy and thinking, hey, this strategy is absolutely amazing. I want to be catching these kind of moves. Obviously, you've already given a lot of tips on, or at the beginning of this video, where you mainly talked about your own journey and what could be learned from there. But what is something very specific that you would like to give as a tip to the people watching at home?
That's when you just start with trading, don't go instantly into prop firms. Open a small live account, even if it's €100. Keep track of the metrics through like something free, like my FX book or even a Notion template, and really focus on, can I make returns with the same amount of risk on this, and really up my knowledge. And not really, I've seen a lot of traders who are busy for 3 years, and they really discourage themselves by instantly starting with a prop firm, losing a lot of money. And yeah, just really think process based, have realistic expectation on that trading can, because if you want to make a doctor's salary with trading, then also don't expect to like make it happen in 3 months when a doctor studies for it for 10 years. That's
Yeah,
really
very well said.
important. And also, yeah, a lot of people think trading is about learning these technicals and fundamentals. Of course, they're important, but it's, you really have to rewire the way that I think. I've spoken to a lot of people who have a successful business, successful job, and they treat trading this exactly the same. They think, if I lose, I want to exactly know why I lost. But even the biggest banks, quants in the world, they lose. If you want to find out why you lose, you are never going to find those answers. Just follow on what you can control, your psychological development, and yeah, all the things are in your control, and you will see a lot of progress, instead of just trying to perfect trading, because there will never be any form of perfection in it.
Yeah, very well said, man. I think a big takeaway from that is indeed don't start too early with those prop firms, because what will happen is that you're going to discourage yourself so much, because it might seem like a small loss every single trade that you take on a prop firm account. Okay, let's say you buy $100,000 account and you take a trade minus 1,000. Obviously, that's going to discourage you. But what's going to discourage you even more is that if you lose the 1,000 US dollars that you used, or the $500 that you used to actually buy the account itself. And if you do that for, let's say, 3 or 4 times in the very early stages of your trading career, you're going to lose, let's say, in one go, 2,000, maybe $3 or $4,000. That will discourage you a lot. So what you can do better is, indeed, like Tyne is saying, open a $100 or $100 account, take those 0.01 lot trades, start building that track record, start building that overall confidence before you then make the bigger step into investing into those prop firm accounts, and then trying to scale up your capital and make, indeed, like Tyne said, the income of a doctor. Now, Tyne, I want to thank you so much for your time, man. I think a very valuable interview overall, an amazing trade breakdown, very clear how you analyze the markets and what your perspective is on it. I think also mindset-wise, you're very far ahead of many people in the trading space. So I want to thank you as well for that. I think a lot of takeaways on that side. So yeah, guys, if you enjoyed this interview, make sure to leave a like underneath this video, subscribe to the channel. In the description, make sure to join the free Discord server. Tyne is there sharing his perspective and his market updates of what is going on every single day. Also, some insights into his life, his healthy life. He's a big gym guy and always eating healthy: eggs, avocado, potatoes. And yeah, Tyne, thanks again, man. Appreciate it. So yeah, guys, make sure
Thanks.
to leave a like and let us know in the comment section what kind of questions you want to hear from other traders who are going to be on here. And if you want to participate in one of these interviews, you're more than welcome to. All you need to do is join the Discord server, open a support ticket, and yeah, send your request there. And yeah, make sure to send over a track record or some proof of being profitable. And yeah, I hope to speak to you guys here. I hope you enjoyed it. And yeah, have an amazing day. Thanks, guys.